Good afternoon. Welcome to Option Standard, Saturday, February 10th, 2024. Welcome, everybody. I have some really cool stuff to show you here today. We're going to go through SPY on the multiple time frames. We're going to give you the wave count that we've been working on, the topping pattern, but we're going to key in on IWM. IWM is looking somewhat structural. It looks like it might have some legs, and I want to give you the two scenarios that we're looking at. And if IWM does one thing, then we're going to stick with our topping pattern. If it does another thing, then we may have one more leg up. But both situations are going to follow the same type of pattern action that we've been looking for. The key is what happens when we correct. So that's what we'll be looking for. Of course, there's always more bullish scenarios, but I'm not in that camp. I think we are ready to correct, and it's what happens after that correction that is really going to mark what we're going to look for. Okay, so stay tuned. Check all of this out. Lots of good information. This is building on all of the videos throughout the week that we've done. This is on a little bit higher time frame. And then at the end, I really want to nail down with you the last little wave that I think we go into CPI on Tuesday. And I think that's going to be easy to identify. And if CPI had a catalyst that perhaps makes the market go up, then we have to look at an alternative, different scenario that we're definitely not looking at the right thing. Okay, so we're at an inflection point, and I think this will be some good information for you. So if you're new here, go down to that bottom right hand corner, hit that Option Study logo, and subscribe. So we have lots of cool information, and we do these videos as often as we can. So go ahead and hit that notification button, that bell, and don't forget to like the videos. You guys have been awesome. Thank you very much for all the support. Now let's jump into this information. We have SPY on the monthly time frame. So far, we can't say that this is bearish. Each time we look at this monthly time frame, we had a breakout. Okay, so why am I looking at this and saying why am I getting bearish? Well, I want to catch this turn. I'm looking for the turn to, at minimum, and this is what this whole video is about. At minimum, back test this breakout. Okay, if this holds, then that's gonna say a couple things. Maybe we get a bounce, of course, but I want to back test. Then we have two scenarios. We go one more leg higher, or we break down. Okay, that could look in a couple different ways, where you get some sort of reaction, and then you head lower, reaction higher. Okay, so that's just in a nutshell. If you want to end the video here, then that's what I have to say. But we're gonna kind of map this out for you. And let's go down to the weekly time frame. By the way, we have bearish divergence on these two tops here. So you want to see that real quick? Bearish divergence from here to here. The histogram is heading upward, so it's really still a possibility that the yellow line can test the blue line and continue higher. That's what we're going to key into, and I think IWM is going to be the key to giving us that information. Okay, so on the weekly, on this weekly time frame, again, we don't really have any sort of setup here other than divergences. We don't have a setup that says that this is a hangman candle, that we have supply, that we have weakness. Okay, the only thing that we can count on is the patterns that we're talking about in the daily time frame, and we'll look at those in just a second. But really, this is that test point that we're going to look at to back test. Okay, you have the 8 EMA, you have the 20 here, so we'll key in on those, but really, this is the breakout zone. So that's what I want to look to backtest here. Let's go ahead and go to the daily. Then we'll check out the Elliott wave counts. So daily trend is our friend. You see that consolidation zone? That's the same thing that I'm constantly showing you here, which will provide some support if and when we get down to this point. And I think it's very, very probable. So here's this channel in the turquoise from the bottom of this move here, from the bottom here, and to the tip here. You can consider this a zone if we get some sort of, let's look at the candle. It looks like we're kind of breaking through here. I said, if we get on top of this and start closing on top of this channel, then we could possibly see the upper edges of the pattern that we're looking at for the topping pattern, and that's an expanded ending diagonal. And we'll get a better point of view. Again, I just want to show if we do get some reaction here, if we start to turn, we're looking for the correction to be somewhat large here. We'll look at this in a different way. Let's go ahead and pull up the board for the expanding ending diagonal. So this is what we've been concentrating on. We have a three-wave move for 1, a flat, expanded flat for 2, three-wave move for 3, which is longer than 1, three-wave move down for 4, which is longer than 2. It's expanding, and now we're expanding momentum. We have our 3-wave here. This is wave A, B, and we're completing C as we're looking at this. Can we make it all the way up here? 505, 507. There's a line I could actually draw a little bit steeper, but we'll work on this one first. A little bit steeper that says 507, 508. Okay, so again, nothing bearish at this point other than caution on. Yes, I'm in puts, but I'm going to continue to hedge. That's my strategy. If you want to hold out and wait in cash or continue to play some of those beaten up stocks that are sort of rocketing, that are mooning right now, then you can get that's a tell sign, you guys, of getting to a top. That's a sign when a lot of those meme stocks, when old favorites that have been beaten up so much, that's when they have time to start catching up. You're usually the last ones to play this out. Okay, so now what about this alternative? After our correction, either way, we're looking for a top. No matter what, we're looking for a top. Is it going to hit the top of in a expanded ending diagonal? We don't have to hit the top of this expanding channel. Okay, we don't have to hit the top there. It can end now. We're looking for that retracement back to this consolidation zone. And this is what I have, a new ending diagonal that we'd be looking at. Okay, this is not a projection of how high we can go. It can go higher than that, but I do presume that this, because wave 1 is the extension, wave 3 is a little bit shorter at this point. We'd have to go much higher for wave 3 to be longer than wave 1. Then wave 5 cannot be longer than wave 3. That's what that would set for this criteria. And I drew this pretty extended. This would be towards the bottom of that channel if we break down. And that would tell me this doesn't necessarily have to happen to where wave 4 crosses wave 1. It just usually happens when you're looking at an ending like that. Now, if you count this in a way where this is, you count 5 waves into here for 1, and then the flat for 2, and you count 5 waves in for 3, 4, 5, I can't get that. I can't really do that. So to me, in this being a wave 4, in a way, it can't be just a normal wave 4. It crosses over this. It's just really deep. So this is not an ordinary situation. So that's why I'm looking at this expanded or this regular ending diagonal. So this is a 3-wave move to me. And then a real deep correction. So in this alternate scenario, this would be your 1, 2, a shorter 3, but still a 3-wave move. A 3-wave move down for 4, which is likely to cross wave 1 if that's what the pattern is, and then a 3-wave move up for 5. Okay, so that would be those recent highs that we would test. And just to give you a better look of, I probably should have, let's see here, the weekly time frame. That would be this area here. So let's say doom and gloom, we make it past this this high, this previous high, this consolidation area, and we start breaking down here. That would give us that 20-week moving average. That would also give us this 100-day moving average, and test the highs here, which would be our wave 1 in that scenario. So this would be more of the inflection point that I'm looking at. Okay, so I kind of focused on this one a little bit. That would be our first zone to test. But really, this one would be the zone that would fit that scenario that I'm talking about, crossing over wave 1. If we hold this, then we have a possibility of making a 3-wave move higher for a wave 5 there. So in the beginning, yes, this is going to be important zone, because we can't get anywhere lower if we can't get past here, right? This is going to be the test for around the 8 EMA and a little bit lower. This will be our inflection point, our very, very important zone. Oh, look at that. And it just so happens we have a pivot there as well. So we'll be taking a look at that pivot as price action possibly goes to this point. We get down to this point, it holds. Maybe that's the March or May FOMC. And if it's, creates a bullish reaction, we could head higher for one last move. That would be our alternative. And remember, our regular would be the expanded diagonal. And this would be our top. And then we start working impulsive waves to the downside. I don't believe that we would have anything like this wave 4. We thought this might be a leading diagonal, and then we get a pullback, and this was a good high there. Okay, we thought that was the high of the market, but this was a messy impulse wave that we were trying to count that as. In this situation, I don't think that will be the case. This is a major top. I think that we'll get something a little bit more impulsive, a little bit more clear to the downside, and we should be able to identify that a lot sooner than making this a expanded leading diagonal, a correction, and lower. That was what we thought before. Now we have our two situations that we're looking at here. Okay, so we're looking at that inflection point being around the 455 area. All right, so let's jump over to IWM and show you what would give us this scenario. So our one scenario here, I called this the top because I thought we had our top in already. I do think this is the top for IWM right now. So this is our current count where we had our A. All this move here was an A, B, C for A. We have in red A, B, C to complete the purple, the major higher degree wave B, and then we have a wave C headed down. Now, what would that mean for getting in a little bit closer? This is our impulse move, and we have an A, a B, and we're looking for wave C, an impulse wave to end. And we talked about this in, I think, the last video, where if we got a high, we actually intraday got above this high here on Friday. And so with this being a flat pattern, it should look something like this. So if you're a bull, you're saying I broke it, that IWM broke out, and this is constructive, and we're moving higher. As a bear, this is going to be kind of our tell sign. This is a bear flag. We have a impulse and then an A, B, and it just so happens that the top of our bear flag is the 201. That's the top of the channel that IWM has not been able to really break out. We broke out, and it was a fake break here. All the rest of the moves were pretty much held by there. Not pretty much. They were held by either the bottom turquoise here or the top there. So we're looking for the retest of about the 201 area, maybe just slightly above 201.50. And how we can look at that back on we'll look at on the 65 minute, but I wanted to give you that look. This looks constructive for the bulls and the bears, but more the bulls so far, to where it held this trend line, and we're sort of building this market structure where if we move up just a little bit higher in the market and we get a big reversal here off the 201.50, that's a bear flag, and price action continues lower. We start breaking above 201.50, above this bear flag, above this channel, and now we're looking at something greater to the upside. And what does that look like? That looks like this. So I drew this actually quite some time ago when I was first drawing the expanded ending diagonal. And so you can see I was around December is when I was drawing this. You see the projection that I had here, that we were going to get a correction lower and then move higher. Well, this is kind of the same situation, but I just have to move these like this. Okay, so now let me get rid of that. Now what we're looking at, if IWM gets above that channel that we're talking about, if it's really strong, and it should push really hard, we have all this corrective move. This was an A, all A, because this was the lowest point of any of this move. Okay, so this entire thing is an A. We have a zigzag. You have an A, B, and now we'd be looking for a 5-wave move to end wave B. And this is 62% retracement from the highs. This is the 786. I think it's even more likely that if IWM is really, really strong here and relentless, this is going to be a 1, a 2, and this is going to be wave 3 that continues and continues. And I don't think if IWM is strong like that and starts breaking out from this 201 channel, we're going to be long IWM, because I do think it's more likely that it'll look like this. Especially if A was symmetry, market symmetry, that's all an A move right here. We already had wave B down here to 180, about 188. Then we'd be looking at 100% move up to the 231 area. Okay, that's not exact. That's roughly. So I think it'd be a 1, 2. We get a massive wave 3, some sort of wave 4 into wave 5. And you notice what happens here, we'll probably get a reaction off the 62%. That's the bottom of this consolidation zone. The 68, the 78.6% retracement from the all-time highs is the top of this zone. All right, it's actually right at that breakdown candle high. So if we get into this zone above 212, then we're going to move to 226, possibly a little bit higher to break through 230 and head lower. Okay, So that's why IWM is so important. It's had its consolidation. It back tested the trend line that we're talking about, and possibly to the upside. I don't think that's the scenario. Okay, I know I'm talking aggressively about this move, but that's what it's going to feel like. It's going to be nonstop. It's going to be relentless like this move. It's not going to be any ending diagonal or anything like that. It's going to be aggressive. So we start breaking that 20150, the top of the channel, that bear flag. We start breaking all this stuff here. Then I'm going long IWM. Okay? I know that it's hard to put this in. I do think we're going to get a reversal off of this 20150. We retrace, we get the bear flag, we start heading lower, maybe to the bottom of the channel. And maybe at that point, the market is heading lower and getting into the inflection point that I was talking about. And then maybe my scenario for this was more correct, where we have an A, B, C down to here, and then we go higher. Okay, so I don't want to confuse you. We just want to watch IWM. We want to watch it up here. If we get a rejection up here, great. Now we're getting that turn in the market. And if the lows hold, meaning that this is an A, B, C, if the lows hold for IWM, then we're going to look back at SPY and say, hey, are we holding here? Or are we holding here to go higher? All right. Now, I know we have a lot of time before we start getting there, but I want to give you the heads up at what I'm looking at. I'm looking at a reversal no matter what. I think we go much lower. But I think if we start to get to these points, we have to start hedging, because we can get a nice bounce and then lower, or we can just go higher. Okay, that's how we have to look at this step by step. But I'm looking for a reversal. Now, this very important part is the lower time frame. What is happening right now? We have all these divergences. We're getting tight in price action. If the CPI launches price from here, and this count is all wrong, and we get this acceleration to the upside, then you should probably see that led by IWM. And that really, really expansive idea to the upside should be happening in IWM to lead this move. Okay, so price action's getting a little tight here. I'm redrawing this channel so it fits a little bit better. All right, so we're getting tight here. We have a channel here as well. That price could get up to there. I think we're getting really close to reversing here. If we look at some of the indicators, we've made this steady move to the upside, the grind. And I think this last move should come a little bit lower and make a divergence here. We should start to see an apparent divergence in these indicators. Even though they're already diverging on the higher time frame, we should see another small one here from wave 4 to wave 5. And we'll check that out on Monday going to Tuesday. And what that should look like on the low time frame. Let's go to the 15-minute. Can't quite see. Let's expand. Get a few more days in there. Okay, so we have our wave 1. This of that last 5 of 5. 1, 2, 3, wave 3, 4, and now we're looking at this last 5 waves. So what we have here is a possible, this is how I'm looking at it. I thought this was going to be a triangle, and this is wave 5 at the end here. But I did say in the other video that this could expand. Every time you have 5 waves to end, this could have ended this whole move right here. You had 5 waves, but we pulled back. So now that either meant we had a wave 4 triangle, or price action was just getting tight there, and we had a 1, 2, and in wave 3, you have 1, 2, 3, 4, and 5, but that would only end wave 3. Now we have to have a consolidation for wave 4, and then the last move for wave 5. So this should be some sort of triangle, or it could be a zigzag, it could be flat pattern, doesn't matter. But you got the wave 3 into wave 4 into wave 5, and that's really it. That's it for this move. That's what we're projecting. If it continues higher and IWM leads the way, then the CPI data on Tuesday would probably be that catalyst, and then we have to reevaluate what's going on here. The divergences should burn through, should have all kinds of things that we would have to recount and relook at. But I do believe we are right here. We're really close. We just got our extension there. And that this is a 1, 2. We're completing wave 3, 4, and 5. I don't have any doubts in this. I think this move is done. I think we have just a little bit, a couple more points left. And then we start our real move to the downside. And I want you to be ready. This move is going to be aggressive. And I think that after that, it's really going to tell what happens when we get to those inflection points that I was talking about. And let's watch IWM to make sure that we know where the market's going, because IWM has been dormant for just a little bit, and I think it should lead the way. If it's relentless to the upside, then we're counting this wrong, in that this is going to continue to be a blow off top. CPI should accelerate this move. Very similar to Meta. When Meta got that tight price action here, they had earnings and they just shot up 25%. Okay, I don't expect a 25% move on CPI, but it could, if CPI has this 1 to 3% move to the upside, IWM should be the leader. It should be giving us that situation where we're heading straight, to these moves here. That's a 1, 2, 3, and it's just going to continue relentless. Some sort of 4 somewhere in here, up to these levels here. All right. So that's our alternate. If CPI has acceleration, I'm really putting a lot on CPI, but just watch IWM, whether it's CPI or after some other catalyst that comes about. Then I think we're counting wrong, and the move is starting to get parabolic in SPY. I don't think that's the case. I think we're going to reverse off of CPI, and we're going to start heading lower, and we'll start looking at those inflection points. That should be it's not so clear on the daily time frame. I have a lot more information, but it'll be this one at 474 area. And then if we break down from there, about that 460, let's call it 460 zone. That will be our two zones that are very, very important that we should at least get a reaction off of, bounce, head lower, or get a new high. All right, that's about it. I will say the VIX is going to help us with this sign as well. We have this consolidation zone with this VIX. Is this just an expanding bear flag? We should, if price action is heading much higher on the SPY, we should break down from here, break down from this expanding wedge, come down to the 12 and possibly even lower than 12 on VIX. So watch VIX to break down. Price action in the SPY and IWM should be taking off to the upside. If we hold, especially this little trend line we have here, we had a reaction. So far, we had a green day on VIX. We start breaking out. We're holding this zone here, this trend line. We start holding here. We actually broke out from this really, really tight wedge we broke out of on Friday. We break out from this pennant, then we're talking about price action being a lot lower. All right. Sorry to drag this out, but those are the things that I look at, and I just wanted to share those with you. And I appreciate you being here. I appreciate the likes, and have a wonderful day. We will hopefully have another video to give you another point of view from the Qs and perhaps the dollar and rates, something of that effect. I want to show you more information on tomorrow if I can. And then if not, we'll do it intraday on Monday. Okay, thanks for joining us here at Options Center. Have a wonderful day. We'll talk to you soon.